From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 11, 2017. Today we're going to be taking a look at the GBPUSD, Great British Pound, versus the US dollar for today's trade analysis. The first thing that I would say about this currency pair on the daily time frame is that we're at the top of the overall trend. As you can see, going all the way back to the beginning of the year, January of this year, we have been overall in an uptrend. We started way down here into the 1.2 thousand level, and we have challenged and tested up here right around the 1.3 thousand level. So we know that we're at the top of the trend. When we're at the top of the trend, it becomes increasingly difficult to suggest a buy because we're at the top, we're at the peak high of the trend, and we can see that already 2 times the market has come up to the 3,000 level, the purple shaded area at the top, and recoiled or rebounded off of that level and come back down. We see it back here, and we see it in the most recent couple of weeks, rebounding off of that high. The question is, are we going to see that continue? Are we going to see another challenge back down towards the 100 period moving average, 127, 126? Or will we see the breakout above the resistance high? We don't know, but we can look for clues and evidence to that. So far, we have seen the market bounce off of that purple zone, holding under the green zone. Well, the last time you could see that over here on the left, I put these black circles here to represent the time period where the market bounced around between the green and the yellow shaded area. There were multiple days, 1, 2, 3, 4, 5 days here that bounced around, 2 or 3 days here, and 3 or 4 or 5 days here that bounced around between the green and the yellow shaded area. The green zone 129.65, 129.35, the yellow zone 128.70, 128.45, and we can see historically there's this area where the market will bounce around, find resistance, find support for a period of time. So that's where we are right now. We're between the resistance, the green zone, support, the yellow zone, and we're waiting to see what's going to happen. Are we going to break above the green zone, go higher, break below the yellow zone, and go lower? Until then, we look for opportunities to trade in those directions. Selling resistance would be the green zone, buying support would be the yellow zone. So as you look at it today, we can see the market is clearly closer to the green zone as resistance. So you don't really want to buy it underneath the green zone. Just think about this back here on the left where the black circles are. If you would have bought into the green zone, there were multiple days where that was unhappy about that as it came back down to the yellow zone. There was this one period where it did push to the purple zone, but for the most part, it stayed under the green zone. So buying under the green zone, I think, is somewhat risky right now. The only reason really that you'd buy it would be that it would be back here at the yellow zones, 28.76.45, or it eventually breaks through that green zone. Until then, I think selling the 129.35 becomes an opportunity for us. In fact, right here, you can see this was support into this area. You see the close of this red candle was right around the 29.16. The close of the blue candle was closer to 29.30. So somewhere between the 15 and 30 level becomes an opportunity. Fibonacci from the lowest low, the last low that we see here, and I'll put a black X down here. Right there where the black X is, pink zone. Fibonacci from that low to the current resistance high puts the 236 at 1.2925, and we're currently underneath that 236. That's the dashed blue line just underneath the blue shaded area. So that's giving us another clue that the market has found, potentially going to find resistance there into that underneath side of that 236 fib. We've already seen it come off of the 382. Of course, a breakdown of the 382, we could be looking for this to tumble a little bit lower down to the 50% or the 618 here, down into the orange shaded area. So there's some Fibonacci, green zone and yellow zone as well, helping improve our confidence in them as resistance or support. Now, clearly, we have seen over the past couple of days a little bit of a fall off here. And of course, if you start to throw in a short-term trend line here, we can see that that green zone becomes an opportunity, again, with a shorter-term trend line as resistance. So it's my expectation today that we don't want to buy this today underneath the green zone. If you were going to buy it, you'd want to buy it either above the green zone or down at the yellow zone. On an intraday basis, this may give us an opportunity to see a quick bounce, just like the previous black circles, a quick bounce off of that green zone and an opportunity for some profit from the 29.35 level. So I would expect that we're looking for a short or a sell. As it approaches the yellow zone, your stop loss likely above the last resistance high. The last resistance high, we'll just take this little peak right here, which is 1.2983. So let's say 129.85. So the closer you can get into the green zone will improve your risk reward. You're going to target the yellow zone or potentially the orange zone or lower for the pound dollar over the next few days.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.